What is up, guys? Taigi here. Today, I'm very honored to invite Cole0x to the channel. He is a VC and also a humble yield farmer. Welcome to this channel, Cole.
Thank you so much for having me. I'm excited to be here. Excited to talk farming and dive into some of the trends right now and things I'm watching and hear a little bit from you as well on what you're watching.
Yeah, awesome. Yeah, so for those that don't know who you are, can you just briefly give us like an introduction to like who is Cole0x and how and when did you get into crypto?
Yeah, so I got into crypto. Well, I first learned about crypto in 2013. I was trading CSGO skins and all the sites were using Bitcoin to trade them. And
Uh-huh.
so I was like, oh, like what is Bitcoin? Like this is kind of interesting. And I read up on it, but it seemed like very complicated. And I was like very young at the time. And like setting up wallets and exchanges, it just seemed intimidating. So I kind of like put it on the back burner for a while and just like carried on not thinking too much about it until about late 2016, 2017, when things started heating up. I thought, oh man, like Bitcoin went from, I think it went from like 300 when I first saw it or something to like a few thousand. And I was just thinking, oh my gosh, like I can't believe it went up this much. I really missed out, but like maybe it's not too late. So that's when I started kind of learning about altcoins and getting into like starting to research altcoins and trade altcoins. And so I had a lot of fun through the 2017 run. I made a lot and then basically lost all of it on the crash. So it was like parabolic gains up and then like inverse parabola down. So it was overall though a good experience because what ended up happening from that is I started writing in the space. So I just started searching for jobs because I wanted to get more into crypto. I was in high school at the time, and I thought like this is a great industry to be in, like early, and maybe like try to find career paths here. So one of the easiest ways in was basically for me at least to start writing. I found a couple news outlets who were looking for writers. I started writing articles every day, just covering like price action and big news and that sort of thing. Not like huge investment theses, just like basic things. And I guess it was a great experience because it allowed me to like one build up some capital because I had lost everything that I'd made in the bull run,
Yeah.
and then also kind of get my feet a little bit wetter in the water and start wading a little bit deeper into crypto and learning a little bit more about it, and also like kind of connecting with various people in the space. And this was like dark bear market days. This is like mid 2018, like early 2019. So there was not that much hope in the market. Like no
Mhm.
one knew it was going to be, or everyone hoped it would be where it is now, but no one really knew it was going to happen. And I feel like a lot of people were just like desperately hoping that it would happen.
Yeah.
But it was still exciting because there's like a lot of different theses out there, and no one really knew which one would come to fruition. So that's sort of my early days in crypto. In early 2020 is when I first discovered DeFi, like learning
Mhm.
about MakerDAO, and during the like Black Thursday in March of 2020, like watching like the on-chain liquidations happen and kind of like the ultimate stress test for DeFi. And it was after that happened where like I became like more and more interested in it because like there's a lot of news about it. I thought like, wow, like this is conceptually interesting. Like it's definitely something to watch, and like maybe it could outperform Bitcoin in the future. And then that thesis sort of was validated in the summer when everything started taking off. And so that's when I stopped writing. I became like a full-time like farmer. I took a gap year from university,
Oh wow.
literally just to like ape into the billion% APY farms and stuff. And so even though all that was like just insane and like really fun to watch, underlying that there were a lot of like principles and thesis for why DeFi like could be transformative. And that's sort of when I thought like, wow, like I really want to, like we're early to this. Like Bitcoin's already had its come up. Like we're not early to Bitcoin anymore. Like maybe macro we are, but in the midterm we're not. But DeFi is still super early. There's a lot of opportunity here, and like I want to be there for that, and I want to like be in this industry. So that's when I started trying to kind of find ways to play a deeper role in the market. I'm no longer writing at this point. I did pretty well during the DeFi summer. And then I think when the DeFi winter hit, and that was in winter, like fall winter of
Mhm.
2020, is when I, with a couple other people, started a fund called Linkpad, and that's been what I've been doing ever since. So it's been a wild ride, and it's been a lot of fun, but
Mhm.
I'm still very excited about DeFi despite the lackluster price action recently.
Yeah, same as well. And I guess like once you start farming, you start using these protocols and you kind of just like experience
Yep.
how like great it is, right? I mean, compared to like the banking system, like
Yep.
I I used to be or last year I played poker full time. So like my bank saw like a bunch of deposits to like these shady like offshore accounts and they kind of blocked my account. So I need to figure that
Yeah.
out soon. But it's like permissionless systems make a lot of sense. And can you tell me more about, I guess, Linkpad
Yeah.
VCs, like their mandate, like their thesis? Because from what I know, it's like a pretty heavy stablecoin form a mandate. So can you just go through like why it became that way?
Yeah, so Linkpad's a 503B fund. It's registered in California and Delaware. So we have limited partners who are investors. It's mostly other funds that have invested. Some bigger ones have kind of basically account for a lot of our assets under management. And the initial goal of Linkpad, which we're still true to, but it shifted a little bit, was to be basically half farming and half venture. But the problem is that like the venture side of things, like valuations are low to a point where you can't get like really big checks in when you have, like eight figures or under management. Like you can't put like $1 million checks into things every day.
Mhm.
So 50% is kind of a tough thing unless you're just throwing a lot of, shots out there. So we ended up becoming more focused on farming. The fund's probably like 80 or 90% farming, and then like 10 to 15% venture, 10 to 20% venture. And what really happened is, we watched the market run up. Um, at the point where we actually kicked off our first quarter as like an official fund was in the beginning of Q2. So the end of March is when we kicked it off. And at that point, it felt kind of frothy. Like that was right when we started seeing like all these random shit coins start taking off,
Yeah.
and like it wasn't quite like where it got to like a couple months later, but it just, I don't know, it just started feeling kind of like is this really going to last that much longer? And um and so that's why we didn't want to like start our first quarter off with a lot of risk. And I guess my thought process was like I'd rather miss out on gains and like deal with that than actually lose money and have to
Mhm.
like deal with investors and that sort of thing. So we decided to shift like a lot of our farming side to stable coins. In the bull market, stablecoin farming was incredible. Like there were
Yeah.
a lot of opportunities to make like between 50 and 100%, like safely. And so it wasn't like a bad, it wasn't a bad deal. Um, but we did watch like we did have some crypto exposure. We watched the run up with like DeFi coins, with Ethereum. We caught a lot of that, and then then the market basically rugged. And so
Yeah.
it was, yeah, and so it was like it was kind of exactly what we thought might happen, but like we were still kind of caught off guard because I guess I never thought it'd be as severe and persistent as it has been. My theory was always that we would see like a deep pullback, like flush out a lot of leverage, like DeFi coins would unwind because like DeFi is very leverage driven because a lot of
Mhm.
people, are taking like collateralized loans,
Yeah.
people are farming with collateral. So I thought like, okay, like it makes sense there's going to be a flush, but I didn't think it'd be like a bear market like it is now. But
Yeah.
so that was like the whole original idea of Linkpad is we just wanted to be very like safe, like catch the long-term growth of DeFi, but do that without taking on too much beta risk. And I feel like we've done a pretty good job of that. And the venture side of things is now where I'm putting a lot more time into,
Mhm.
because just farming is just not as profitable as it was. So we still farm, and that's sort of how we provide some baseline growth. But really, like right now, what my focus is on the venture side of things.
I see, I see. And I'll ask you questions about the venture side later, but
Yeah.
for now, let's focus on the farming aspect. So obviously, like as you farm, you have capital spread across different ecosystems, right? So how does your team, I guess, like think about, okay, like in like right now, let's deploy capital on Polygon, Terra, or BSC, like how do you deploy capital into all these ecosystems, and how do you assess risk that way?
Yeah, it's so, the best opportunities are usually found like right as the ecosystems start taking off. So for instance, like when Polygon first started gaining a lot of hype, like in Q2, you could farm stable coins on Polygon Curve and make like pretty insane yields.
Yeah, it was crazy.
Like, yeah, like literally like 70%. And I mean, it's like, it's not zero risk, but it's like as close to zero risk as you can get basically farming. And so that's when there's like peak opportunity. But what ends up happening is like those yields depreciate really fast because a lot of people flock to those because it's like a combination of safety and returns. And then you start having to kind of climb further out on the branch of risk. And that's where it becomes sort of like, okay, it's worth just sacrificing yields to like preserve capital. So like Polygon, for instance, like what happened really quickly is the yields on Curve like dropped within like a month. And then all this money started flowing into these new projects that we're launching.
Hmm.
And there's some good yield aggregators and there's some good projects on Polygon, or there were at the time some good ones, but none with like a huge track record, like none that I would feel comfortable putting a lot of money into. So we ended up kind of shifting out of Polygon pretty quickly. And it was the same thing with Binance Smart Chain. Like Binance Smart Chain through the bull market was great. Like there were safe platforms where you could earn insane yields. But as the bull market started kind of winding down, the amount of rug pulls happening on BSC just became absurd. And there was a chart I saw somewhere, and it was like the last 100 rug pulls that have happened, and like 80% of them were on Binance Smart Chain.
Yeah.
And so it's like, okay, like just statistically, like we have a greater chance of being rugged on BSC than we do on Ethereum. And like there's been a couple like very close calls too, and they've all been on Binance Smart Chain. So we've basically like for the bear market just condensed to like mostly Ethereum and Terra, a little in BSC, a little in Polygon, but like we're kind of keeping it very centralized and safe, like not trying to maximize returns right now, just trying to protect the money. Because I do think like this, if the bear market gets worse, we're going to keep seeing more and more exploits and more rug pulls and probably a lot more like insider jobs just because of how profitable it is.
Yeah, agreed. And like I had a Rookhog, a hedgehog on this on this channel a few weeks ago, and he said that
Yeah,
like the best indicator of like a bear market is like when developers start just quitting, right? Because I feel like most developers, they're in it for the money, right? Some people want to change the world, but they just like make a farm that like makes them money, makes the community money, etc. And in the bear market, like there's less money in the ecosystem, so it's more likely that a new project is a rug, right?
yep,
So that's why like in mid-May, I said on my channel, like I'm no longer entering degen yield farms just because
yep,
I don't want to get rugged. Uh, so yeah, I'm glad we share the same, I guess, thought process there.
yep.
So in terms of like farms, obviously you've been in all ecosystems. Binance Smart Chain in Q1 when it had a crazy run up, Polygon in Q2, and now you're doing Q3-ish where you're doing, I guess we're still, yeah, oh yeah, Q3 we're doing Ethereum and Terra.
Mostly Ethereum, yep.
Yeah, so how do you like I guess analyze like these farms, right? Like what kind of factors do you look into uh, in order to determine whether a farm is worth the capital or not?
Yeah, I think the development team is like the number one thing beyond anything else. So like an example would be like when you look at a farm like Convex, for
Mhm.
instance,
Yeah,
it's like made by various like Curve. Um, I think they're core developers. I think
yeah,
some of them are core
yeah.
developers,
I heard they're tied
but
to Curve like pretty closely.
yeah, they're pretty closely tied to Curve. And then you take a look at like Mirror Finance, which is both on Ethereum and Terra. And it's the same type of thing, like very connected to like, the Terra
Terraform
as a
Labs.
project. Yeah, exactly. And also like they're very connected to some like major funds in Korea that like deploy a lot of capital there, and like work really actively with them, like with market making and security and that sort of thing. So at the end of the day, like I can rest easy if I know that there's like a good team behind it who has like good intentions. But when you're going into more anonymous farms, even ones that are audited and stuff, you just never really know like what the motives are and like what could happen. like what kind of backdoors there might be. So that's why like in a bull market, like you can kind of just chase yields, and the chances of being rugged are like reasonably low. But in a bear market, it's more like you basically just have to sacrifice yields, find like really good teams and really good projects, and then also find projects that have like revenue sources and treasuries that if something happens, like you can get compensated for it. Like Belt Finance is one that had a lot of money in it on Binance Smart Chain, and they have a pair called 4Belt, and it's
Mhm.
like 3 curve, but it's like
Okay.
it's like BUSD, USDT, USDC, and some other stable coin. And it got flash loan attacked, and they drained like the entire like BUSD side of it. So like 25% of the pool is gone because
Mhm.
it's 1/4. And a lot of big funds were in that. Like Alameda had like a billion, like Justin Sun had like 800 mil in there.
That guy is
And
a dude. He just flings money around like it's
he just
nothing.
I don't even know where it all comes from at this point. Like I don't know how he has so much money. But yeah, and they were able to basically fully recompensate users afterwards, like through a special plan. Like you get staking tokens, and then it drips it out over like 3 months, but you get your money back. And so like what you don't want is like you don't want to be in one of those farms that the money's just gone and the developer's gone, and you're out of luck. So I would say the factors, just to condense, are number one, like good development teams. Number two is like actually good platforms, good products that in the very worst case scenario, like you might be able to get something out of it. And then third, I would say is having like audited platforms. Like we don't touch any non-audited platforms. Like I personally, like with my personal capital, don't touch non-audited platforms. And even beyond that, like certain auditing firms are better than others.
Yeah,
Um,
definitely.
so yeah, so there's like certain ones where the audit's almost worthless in my mind, and like it may as well not be audited. Whereas there's some other firms that have just incredible track records, and just statistically, like it's very unlikely if they passed one of their audits that something's going to happen. So I mean,
Yeah.
it's still, of course, it could, but it's unlikely. So those are the main three factors that I consider.
Yeah. Thanks for sharing. And I think one of the best auditing firms, they're like backlogged until like 2022.
Yeah,
So to capture like the like marginal demand, like there's like these new auditing firms that might not be as good in quality, but they can satisfy like the demands of like these new forms, and the quality of
exactly.
those audits are just not that great. So yeah, definitely like audits are better. Audits doesn't really necessarily mean that like your funds are safe, but I'd rather ape into something with an audit than a farm without an audit. So like
Exactly.
speaking of audits, like have you ever gotten rugged? Like whether on your personal account or with Linkpad's account or
Yeah. So Linkpad's never gotten rugged. I have been. So I've been rugged. Um, I think just one time, and
oh wow.
it was the Eminence launched. If you remember that, it was Andre Cronje's
Oh
token,
okay.
and
Yeah.
I was like watching
Andre.
like his address for like the contract deployer, and like I knew that it was going to take like when like the real one launched, like it was going to be a big deal. And so I saw the first one like when he deployed the contract. And so and I think this was like later last year, and I put like 5 grand into it, and like it was just gone. Like I was like watching the chart, and like all these people started buying it. I was like, oh man, like I did it. Like I got in first.
We did
And the
it,
chart was
boys.
just going straight up. And then like instantly you just see like the price just go straight down, and there was like some
Yeah.
bug in it. And he deployed it like 16 times before like the right one was deployed. And then when that one was deployed, was when like the people who bought that early just made like insane amounts of money. Like I know people who turned like they put like 5, 10 grand in, and at the peak it was worth like 1.2 million or something
Jeez.
insane like that. So yeah, so I was rugged on that. I'm trying to think. I feel like I've been rugged like, so there was one time I was farming like in the summer something called pizza,
Yeah,
and
the food tokens.
one of the food farms,
Yeah.
and I didn't really get rugged, but the thing just like went straight to zero. I basically like lost all my money,
It's like a
but there was
soft drug,
still
right?
it was like a soft rug. And so that was kind of that it was like it was not much money, it was just for fun. But I remember when it first launched, it was like 1 trillion% APY or something. And so the token just like endlessly went down. So
Yeah, you got iron financed essentially, V1.
Exactly. I missed iron. Luckily, I did not have to deal with iron finance or like Titan or like any of that kind of stuff. So I've been very lucky recently.
Yeah, yeah, same here. I remember like when I made a video about like I made a video called like bull and bear case for iron finance, and like in the comment section it's like, oh yeah, have fun staying poor, like you're not gonna enter it. And then yeah, like I'm never gonna hear from those people ever again.
I
So
know they all disappear.
yeah. And so switching topics, like what's like the best farm that you've ever participated in? And like if you can share like what farm is your favorite right now?
Yeah, good question. Let's see. Best farm long term would probably be Mirror Finance, and I would also say that's my favorite farm right now.
Oh,
Like
nice.
for people who don't know, like Mirror Finance is synthetic stocks. So they have like mirrored stocks. So they like MQQQ, M Amazon, M Tesla, that sort of thing. They track the price based on like oracles, and you can add liquidity for those pairs and earn mirror tokens. And like, I mean, I hope like not too many people jump into it. Like it's already got like billions of dollars, but it's
Yeah.
already got like billions and billions in it. So it's probably not going to change anything. But the rewards are pretty insane. Like you can still make 40% APR or more, and it's it has minimal crypto exposure because you're farming like the synthetic stocks in UST. So it's overall like very safe. I mean, if the stock market crashes, like it would suck, but even like a stock market crash is nothing compared to like a crypto
Yeah.
crash. Like, oh, stock market drops 10%, people are like, oh, it's
Yeah.
over. Where it's like crypto's like down 10% every single day. So I feel like it's non-crypto almost, like it feels very safe. Like in my mind, the biggest risk there is like UST, which is like Terra's stablecoin, and like it's it's kind of a weird mechanism where it's like partially collateralized, and it like they mint Luna like to basically like make up for like demand. And so if Luna's price like nukes really fast, it can lose its peg, and then it's technically only like 50% backed by collateral. So in theory, like UST could like go to 50 cents like someday, like
Mhm.
worst case scenario. And we kind of actually almost saw that happen in late May when the market was really nuking and Terra went from like 15 to $4 over the
Yeah, it was
course of like a couple
insane.
days.
Like, that
Yeah,
candle was like, whoa.
yeah,
I think
it's like
people
one
got
of the
liquidated
worst
on
ones I've seen.
Anchor, maybe.
Yep. Yeah, it
Yeah.
was on Anchor. They were getting it was like what happened to Bitcoin on BitMEX in March 2020, but for Terra through Anchor. It was just a cascade of liquidations. And um, I think UST dropped to like 91 cents,
Yeah.
um, which like that's a big deal for a stable coin. And also what happens is like people start panicking whenever a stable coin loses its peg, and it just becomes like a self-fulfilling prophecy. Like everyone just starts selling it. But it actually like regained its peg really quickly, even though Terra's price like hadn't even rebounded that much. And I know that there's some really big backers out there and like some of the biggest market makers that were involved in that. So I think it's like very safe. But like for Mir, like that's the risk in my mind. And it's like a very acceptable risk to me. Like it's not something that keeps me up at night. So Mir is like my favorite. It's been the most consistent returns over the past like 6 months. It used to be like 100% APR, 110%. Now it's like 40, which is just insane for a bear market. So
Yeah.
especially not having crypto correlation too. So Mir is like by far my favorite, like
Yeah.
long-term farm.
Yeah, I agree. I agree. Mirror is really good. I'm also a mirror. I made a video about like my mirror strategy, and like it involved shorting gold with like a relatively low collateral ratio, and then like whenever my fund gets unlocked, I'll like long something else. And then I made that video when the short farm APR was like 40%, and now it's like at 3%. So I
Oh,
don't know if it
really?
was I don't know if it was from my video, but everyone just like thought it was a good strategy.
Well, the short farm APRs for like some of the stocks are pretty crazy. Like I think you can short farm Coinbase. It's like 80% APR
Yeah, I
right
think
now.
Square just got listed and it's like 70, 80, 90.
Yep.
Yeah, but it's
And
really
that's another
volatile.
thing. It is. But that's one thing. Like I'm not doing this personally, but you can long farm and then like equally short farm,
Yeah,
and then basically it's delta
delta
neutral.
neutral.
and then you're just collecting the yields in between, which I remember I looked at like averages at like, well, you have to over collateralize the short farm.
Mhm.
So technically you're not like using all that capital. And so you have to think, okay, like there's opportunity costs there, right? For like locking up this capital. But then even then, like the APR is like 60, averaging like 60% for most of those pairs, which is like wild. So I'm not doing that personally, but it's like, it seems like a lot, it's like a lot of work to kind of manage and stuff.
Yeah.
But I know like some people who are doing stuff like that and it works out nicely.
Yeah. And like I personally own stocks like in my like brokerage account. And I'm like, oh, why am I holding it here? Like I should just be like, long farming
Yeah,
it. Uh, and I guess like I own like Square AMD and stuff. So like I might just short farm like on Mirror. Like why not, right?
yeah,
Yeah, definitely like Mirror. It's really good. And I also have a friend who I met through crypto who like has a VC, or no, he has a hedge fund in the stocks
nice.
in the stock market. And he's like, oh my god, like you're telling me I can like farm with like Amazon? Like, oh,
I know.
I'm
People don't believe it. It's hilarious because I actually I have a lot of the calls I take now are like with family offices.
uh-huh.
That's who seems to be most interested in like getting into crypto now. And it's because like a lot of their clients are interested in it. And like some of the stuff I tell them like that, like they just can't fathom it. Like they're like, where's this money coming from? Like, how is that possible? Like,
Yeah.
you know, stock exposure and earn that kind of yield, or like euros. Like I was talking about like Stasis Euro, how on Convex you can farm like 15 to 20% on euros. And guys like the guy I was talking to, he's like this older gentleman, and he was saying like, wait, euros are like negative interest rates right now, like in the EU. Like if you just have like euros in a bank account, you're losing money every year.
Yeah.
Like, so how are you making 20%? And so then you have to explain like liquidity incentives and like governance tokens and emissions. And it like, you know, it's like a tough sell for like people who don't really understand it. But yeah, it's like it's such a different world we're in. Like we live in like this like little microcosm that other people just can't fathom.
Yeah. And even on Twitter, like Twitter, right? Like it's mostly, I feel like Twitter is mostly traders. They're not, it's not really heavy in like the farming. The farming community is not too strong there. And I mean, I try to talk about yield farming, and then people are like making memes about passive income. It's like it's not real. Like
Yeah,
Wi-Fi yields are like at 2%. Like, haha, yield farming is dead. And then here we are, like it's like 20% is FUD, bro. It's like
I
I'm
know.
earning 40, 50, 60% over here. Yeah.
Exactly. Yeah, I don't think people fully understand like urine is like not where you go to get yields. Like, you know, there's a
Yeah.
lot of places with great yields. You just have to know how to, you know, just have to know how to find them.
I see. I see. So speaking of Mirror, I guess this doesn't just apply to Mirror, but like with other farms. So like, what do you do with the farmed asset, right? Do you just farm to speculate on the asset, like for Mirror, do you just accumulate, or do you like start like selling half of it to like ETH or Bitcoin or like whatever other asset that you're bullish on? Like, how do you go about the farmed asset?
Yeah, so me personally, I once a week like harvest and just sell everything to stable coins. But that's because like a big source of my like income is from my farming revenue. And so I
Mhm.
don't really speculate with it. You know, like I have some bags of crypto, and like I have some crypto farms that have like crypto pairs that I hope they go up. But so I don't really want to like add exposure. But then for Linkpad, it's a little different because it's like the goal is just like long-term growth, and so it's a different goal than what I have personally. And it's a mixed strategy. So there's only two coins that we like really farm and accumulate, and that's Sushi and Curve. So we farm Curve through Convex. Like
Mhm.
generally, like I'm not super bullish on the Convex token. Like the emission rates are just insane for it, and I don't think there's like a really great incentive mechanism to buy it long term compared to just buying Curve and staking Curve. So like we keep our Curve, and then we keep our Sushi, and then we stake the Sushi we make in X Sushi, which
Okay.
like
Yeah.
isn't great returns, but it's just because it's like a long-term hold for us. Like some returns are better than none. But basically every other coin, like even Mirror, um, actually Mirror I'm not bearish on, but at the same time too, it's kind of like we just have to keep the fund like balanced so that like our crypto exposure doesn't grow too much. And
Mhm.
Mirror, like I'm just not like the Mirror token. I'm not super excited about long term. So we basically just sell it, and that might actually be our Mirror might be our biggest revenue source too.
Oh,
Like
interesting.
it's a lot. And so if we just kept it though, it would be like really shifting our exposure constantly towards crypto.
I
And
see.
so yeah, so it's a mixed strategy. Like personally, like, and honestly, I've been happy I've done that because like a lot of my like personal farms I'm in, the tokens are down like so much. If I just been like farming and holding, I would have made like way less than I have now. So overall, like I'm pretty happy with that strategy. But it's funny you bring this up because just like yesterday, I was thinking like, is this the best strategy now? Like we're in a bear market, right? So like generally, it's a good time to start accumulating.
Yeah.
Like we're getting to that point, and like accumulating from farming is like a really good way to accumulate with zero cost basis, essentially. So I was thinking like in a bull market, it makes sense just to sell the stuff because you're making just insane amounts of money. Like don't be greedy. But in a bear market, like maybe it does make more sense to actually use farming as a tool to accumulate instead of to generate income. So it's something I kind of grapple with. But I don't know if you have any thoughts on that. I'm sure you do. Like how you run your strategy as well.
Hmm. Yeah. So I guess so. Right now, I have funds on Anchor and Mirror. Um, just like deploying the various strategies that like we talked about. And I'm generally like bullish the Luna ecosystem. And I feel that, I mean, if this thing can go from 20 cents to $20 in from like December to like March, I forget when it peaked, then I feel like this is an ecosystem that can like really like go up. So I feel like like rather than accumulating more UST, I'm just farming more Anchor and Mirror. And if and when Luna decides to have the next run up, I'll be like slowly DCA selling into UST. So I guess I usually just farm and dump tokens, but if there's a bullish thesis for it, for like whatever thing I'm farming, then I'll
Mhm.
accumulate. On Polygon, the one thing I was farming and accumulating was Qi. I don't know if you heard of Qi, My Finance. I was farming it in May when it was like 25 cents. And then when Iron Finance peaked, it was like $6.
Oh my gosh.
Because it was a MakerDAO fork, and I thought like, okay, like if Polygon's a thing, then there's some value in Qi. I ended up selling around $3. It just like
That's
crashed
not
from six
bad.
to yeah, it crashed from 6 to 3 when Titans just collapsed, like all the farm
Yeah.
tokens collapsed. But that was a pretty profitable thing for me. And I sold, I farmed 1,000, I sold 750, made like decent amount of money. And then with the other 250, I'm just staking it on Cheetah. I have it locked up for the next year. Like I don't care if it goes to zero. If it goes to zero, then like I took profits. If it like somehow accumulates value, then like I own a lot more. So that's how I think about it. It obviously depends. Like in a in a bull market, I'd rather just start like sell some just because like these tokens are just
Yeah.
so overpriced. And when I first entered crypto, like when I was first, so I got into DeFi January of this year. I think that's when I like started like, studying Ethereum and like learning about DeFi, and like everything every new project I researched, I was like, oh my god, like this is gonna change the world,
Yeah.
like
Yeah.
I was very bullish Badger. If you go to my video like 5 months ago, I have a Badger video, right? Like not knowing that Badger was a farm token. It's like, and I was like, after yield farming, I'm starting to like understand like, I mean, this applies like the newer folks, but it's like buying the farm token usually never really pans out. Sometimes it can, but like literally like whales and like institutions are just forming these tokens for free. And like you said, it's like a revenue source for them, right? So it's,
Hmm.
and especially if they're like governance tokens, it's like why accumulate this thing? Like what it's better to farm and dump. Um, but when in a bear market, like when these valuations are compressed, like if I'm farming sushi or if I'm farming mirror, I feel like I'd rather sell them later when
Yep.
it runs up because I think Luna is gonna have another run up, just like my opinion. But I think it just makes sense. Like Luna, the Luna token can work in a bullish environment as we saw in Q1, and there's going to be demand for UST in a bearish environment as well to do these farms. And if there's more
Hmm.
demand for UST, then Luna should go up. Like that's how it's designed.
Yep.
So that's how I think about it. But I'm still like, I mean, I'm a newbie, so like I'm still learning, but farming has given me like a better perspective on like value, like
Yeah.
value accrual in tokens. Like, what are your thoughts on that?
Yeah, it's such a tough one because it's kind of like you said, it varies so much case by case. Like, and there's sometimes where there's like really good projects. Like Badger's a really good project, but it just like the token emissions are just too high. Like
Yeah,
there's nothing you can do about that. And so it kind of sucks because like people want exposure to like good projects. And so they just buy the token. But that's like sometimes maybe just farming the token and selling is like the best exposure you can get. I do you talking about some of the farms you've been in reminds me of a couple that I've been in that were just insane yields for like a few days where like every time you sell, it just like goes up more. And it's like hard to imagine how. So one was Walt Finance on
oh, was it
Binance
on
Smart
BSC?
Chain.
Yeah, yeah.
Yep. And the other was Basket DAO on Ethereum.
Oh, okay, okay.
And so Walt Finance, I remember we started farming like a pretty big position there, and it was at like a penny, or yeah, it was like at a penny. I remember like I woke up the next morning, checked it, and I was kind of sketched out by it because it was like like it has like a CERTIC audit, which like isn't super comforting to me, and it like seemed decent, but like there's nothing about who created it. But the yields were just insane, and a lot of money was going to it. So I thought, okay, like it's worth it. And then the token like was at 1 cent the day we entered. The next day was at like 10 cents. So like in one day, our yield was like 100% or something nutty. And so it's like, oh man, like I need to start selling this. So I like started selling all the tokens we were getting, and then like I came back the next day, and it's at like 18 cents. So it's like doubled again. I'm like, what is going on? And then the next day it was at 30 cents, and then just like peaked, and it's just endlessly gone down ever since. But the thing was like, it's like hard to know when the, because you'd think like, okay, there's going to be a massive introduction of tokens to the market, right? Because they're just starting rewards, everything's boosted, like it's going to dump. And so it's really easy to think like it's just going to go down, but then it pumps. And so I've seen that a couple times, like Basket DAO, same thing. You could basically they make like a version of DPI, like the DeFi
Yeah,
Pulse Index, but you don't pay fees because it uses the yield bearing version of the collateral assets. So like instead of like Aave, it
sushi,
uses
X
like
sushi.
exactly. And so you actually get paid to hold it like 1% per year or like 0.5% per year versus DPI where you have to pay them 1% per
Yeah,
year or
index
something.
scoop.
Yep. And so you could stake the DPI tokens, and I think it was like 800% APR for like a solid week, and you just have DeFi exposure. And the team is anonymous, but like I was like looking through their Discord, and like there was a lot of people, like the first people in there were like a lot of people who are like big in DeFi, and I thought like they have to know like who's behind it. Like some of these people have to know who these people are. It's like the only way they could have gotten into this so fast. And so I thought, okay, like I'll take a shot with it. And like it did very well for a while, but their token, their governance token, just is called Basket, and it just like endlessly went down. Like it pumped like for the first few days, and then every day I just watched it like go down 10% endlessly. Like I didn't even know something could go down 10% that long, but it
Yeah,
did.
systematically, right? It's like a
Exactly. You're like,
staircase of death.
yeah, you like look at a chart, you're like, oh, like I could see some people like buying down here, like it's gonna bounce, and like it starts bouncing, and all these people who have been like accumulating rewards just sell into it, and it just
Yeah,
keeps going down. But yeah, so those really high APR farms, like with most cases, like I'll sell the governance token pretty fast.
I see, I see. Yeah, I mean that. Yeah, I feel like that's how people felt with Titan. It just like kept
Yeah,
going up, and then everyone's like, "Oh man, like this is the best thing ever," and then it just like collapses like in the blink of an eye. Just
I know.
crazy stuff with these farm tokens because once like major players start selling, it's just like an endless loop. It's like, okay, time to cash in.
Yep,
And
exactly.
that's why I feel like I should always just like DCA out of my tokens. After if I'm early into something, then I'll just farm to accumulate. But if I'm like entering the mid to late cycles, then just farm and dump, and be
Yep,
safe with it.
same.
Yeah. So I want to transition the topic to like the more VC side and the seed investing side. That's what.
Yeah,
So you said you like 85, 90% stable coins or just other crypto, and then 10 to 15% seed investing. So like how do you determine like what kind of projects to invest in, and how closely do you work with the team?
Yeah, so good question. Like, so seed investing is like, I like farming, but the seed investing side is my favorite side, especially after you close with the projects, because I really do like working with projects and like trying to help out how I can. Like, it's kind of fun and exciting, because you kind of get the best of both worlds, right? Like, you have stake in it, like you get to kind of help out, but you don't have like all the stress that like founder has. Like, these founders are like stressed out of their minds, like
Yeah.
going into new launches and stuff. Like, they're working like 15 hours a day for weeks on end. But so it's kind of the best of both worlds. And so finding projects is pretty tough. But we actually work with a couple like larger funds, like pretty big names in the space, and share deal flow. Like, we send things we find to them, they send things they find to us. And that's a really nice way to get introductions and get into these various rounds. And then we also, some of the projects that we work with really closely, like you make a really good impression with them, you put a lot of effort into it. And if the founders are part of like bigger development groups, or they're like serial founders, they'll like invite you to invest in like future projects as well. So it sort of is just a game of just being like very active, like building connections, being communicative, like being available to help, talking to, other people, connecting them with angels, that sort of thing. And it just gains momentum and kind of starts carrying itself eventually. So it's really nice. And I'd say it's mixed. Like, some projects we invest in, like we don't work with that closely. Like, they're just not interested in it. Like, what they needed was money and not like help with things, and that's fine. Whereas some other projects, like, we're like involved on like a daily basis. So I'm sure we'll talk about later, but like Dinoswap was one. Like, I worked with like very closely, like on a daily basis. There's been a few like that. But then there's a few where you kind of make the investment. You check in with them like once a month, see if they need anything, and like that's about it. So it's pretty mixed. It just depends on what the founders want.
I see, I see. Yeah, so let's just jump into Dinoswap, because yeah, you're one of the, I guess, the early investors, and I guess like I mentioned earlier, like in May, I said like no more degen yield farms. I mean, I'm not saying Dino is a degen yield farm, but like like
A
something
little
like
bit.
that. Yeah, something in that category. Not gonna enter because I don't want to get rugged or even soft rugged. But I saw Dinoswap on my feed. I'm like, okay, like it's backed by, who is it backed by? And then like, okay, there are all these people. Oh, it's even backed by Do Kwon of Terra and
Yeah.
Harmony One. Oh, so there's gonna be all these partnerships. At least that's what I'm predicting. That's just my hypothesis. So can you just briefly go over like what interested you in that? What interested you in Dinoswap, and like what's like your bull case, let's say?
Yeah, so we got introduced to Dinoswap from another fund. And one of my partners through that fund was working with them and said like, hey, I think, like Linkpad would be a really good value add. So we spoke with them, and they echoed this goal of like, they wanted, and this is what I mentioned earlier. It's like when I was farming on Polygon, it's hard to find in these like newer ecosystems, like really good farms where they're consistent, you can stick with them long term, you can feel safe in them, but actually earn like reasonable yields. Like, you're not earning 7% or something on
Mhm.
assets. And so I thought, okay, like there's definitely room for like an aggregated, a place for aggregated yields on Polygon. I know there's a couple others. Um, sort of, so what I always envisioned Dinoswap potentially being is kind of like what Pancake is for BSC, like Dino could be for Polygon. That was my thesis. And that was supported like when they start talking about like these various mechanisms to counter out emissions, like extinction pools and tar pits, and then just Dino staking, as well as like a few things that are in the pipeline that they haven't released yet. And I saw this, I thought, wow, okay, like there's a real good thesis here, because yes, it's a farm token, which like can be a little bit risky, but at the same time too, like their entire I guess their entire kind of thesis surrounding it is that they can create enough utility for this token to counter out the emissions from the farms. And
Mhm.
that's what I think PancakeSwap did really well throughout the entire run. It's like they created like a lottery, they created all these different things where people are burning a lot of cake tokens. which counters out like the massive amount of cake tokens that are being handed out every day. So I thought, okay, like if Dino can do this, like if they can do what PancakeSwap did and find that balance between emissions and burns and utility, like it's going to do really well. And you know, we worked really closely with them. Like they're backed by like a lot of really good angels, a lot of good funds. They have a lot of support, and that's another thing too. Like when projects get backing like that, like they through those backers, they have access to a lot of resources that other
Mhm.
projects may not have access to. They have access to, you know, exchanges. They have access to other ecosystems. They have access to all sorts of things. And so it makes it a lot easier for those projects to be dynamic and grow and be nimble and change if they need to. So I just like took all of these elements and thought like, okay, this is a project I want to put a lot of time into.
Yeah, no, thanks for sharing. Yeah, even from like an outsider perspective, as like a normie retail investor, I just saw like all these backers and like, okay, like they have a financial incentive first to like make this successful because their tokens are vested over 12 months,
Yep.
and they have all these resources, and the team is like phenomenal. I mean, in terms of like how the Discord and the Telegram is run, every other like the more degen yield forms, it's like two dudes that's like just being an asshole to like all these new people. It's like, how do I buy this token? Just go to Sushi, man. But
Yeah.
all these the mods on Dinoswap, their Telegram, it's like, yeah, so you have to do this. Oh, but your APRs might go down if you know more people enter the pool. You know, it's just like a really like group of nice people.
Yeah.
And I can tell that like they have funding and like they're able to hire like at least 5 moderators or something. Like
Yep.
they have like slots and stuff. Um, and I guess my thesis is like, okay, like it has this backing. Terra is in it, Harmony's in it. There's probably going to be like those tokens are probably going to be listed on there sometime because like that's their incentive. So like I guess like putting my poker player hat on and like the game theory on, it's like, you know, there are gonna be more partnerships. The team knows what they're doing, so you know the Dino token isn't gonna dump to zero.
Mm-hmm.
So if that's the case, if it even if it doesn't like pump to like double digits, this Dino USDC pool that I'm currently in is like printing.
Yeah.
So like I'm not really in this farm to like make a fortune like 100x. It's like this is just a plus EV farm that I found given all the research that I've done. And you join the Telegram, there's like people doing like $30 price targets because this is definitely going to be the next PancakeSwap. Like even if you have a more conservative approach of like, okay, like base case $2, like where it is now, bull
Yep.
case $10, bear case 50 cents. If you like weigh the probabilities of those scenarios happening, then it just makes sense to do what I'm doing. Like not financial advice, of course. Like I don't, what I'm doing is very risky, obviously.
Yeah.
But I just think from like a expected value perspective, the EV perspective, it just made sense.
Yeah.
So
I agree. I agree
yeah,
completely. And like I will say that like my goal in terms of like right now my goal, or like I guess I should say Linkpad's goal, like my goal personally too, because like I'm an angel investor as well, is to accumulate like as much Dino as possible. And like you said, it's not necessarily because like, oh, it's gonna go to $30 or it's gonna do like what Pancake did and go from $1 to like 45. Like maybe, but like that's not what I'm counting on. But when you have these farms where there's like productive assets, like you can put it to work, right? Like you can stake Dino USDC and earn like 1500%
yeah,
APR or something. You don't need it to go to like $50 to make money. You don't need it to go $10 to make money. Like even if it just like holds its current price and you can accumulate like a massive token stake, you know, through those types of yields and then compound them, like that's significant. Like the power of compounding when you're looking at like emissions that high is just wild. Like
yeah,
people
it
just
really
don't fully
is.
understand it. So yeah, it's like, you know, I'm bullish on the token. Like I do think it's going to do very well long term. Like it's not one that I'm at all interested in selling right now. Like I'm staking in the liquidity pool, like Linkpad is too, for Dino USDC, and compounding the returns. So
You're
like that's the
diluting
goal
my
right
pool,
now.
man.
Yeah, I mean, I think that there might be some bigger part. I was looking through like the like I think it's the Sushi Swap LP is where you have to stake on,
Yeah,
you have to stake on Sushi Swap. And I was looking at like the SLP tokens, like the contract by like largest holders, and there's some people with like a lot of money in there. And so um you know, I assume that those are probably like other funds and such. So,
Yeah.
but see, like that's part of it too. Like when you see backing, I know like there's a lot of hatred towards like funds right now, but like people don't understand like the kind of capital that like funds allocate to projects. Like good funds like actually help projects, and they actually do provide liquidity and that sort of thing. Um, and you know, tokens, like if Dinoswap didn't have these backers, like it may have like a small fraction of the liquidity that it currently has. So
Hmm.
it's, yeah, so it's important. But yeah, I'm very excited about it long term. Like I don't know what it's going to do short term or midterm, but like long term, I have confidence in it.
I see. So interesting. Like I I guess from my perspective, I entered it from like a short-term perspective because I really can't predict like how you'll sell your tokens. I don't know how Defiance and Spartan will sell your tokens. Because like I'm just like not in that loop. So my strategy was to like just maybe farm it for maybe max 1 month and then just like slowly take profits. Uh,
That's
because
fair. Yeah.
yeah, but obviously it depends like VCs are on your side until they aren't. So like I just have to
Yeah.
protect myself to the downside. But I mean, seeing like the one thing I noticed is that the team is really good at community building.
Yeah.
They have an AMA scheduled Friday, and like I mentioned, like the moderators are good. I feel like that's something people overlook because
I
a
agree.
lot of people new to DeFi, like they don't really know how to provide liquidity, right? So you can't just be like, yo, let's Google that shit. You have to
Yeah.
be more nice. Like, okay, like you have to buy $10 of Dino and $10 of USDC, go to Sushi Swap, provide liquidity, and then you can stake it. Like, oh, okay, that makes sense. Uh, and also like, oh, speaking of which, I realized that PancakeSwap has an uncapped supply of their tokens, right? And Dinoswap also has an uncapped supply. And I feel like a lot of people, they just assume that uncapped supply is bad and fixed supply is good. But like I feel like it's not. I mean, that's not the case, right? As long as there's utility, there's reasons to hold the token or burn the token, or like if there's like demand for the token, it doesn't matter what the
Yeah.
like fixed supply is. Obviously, the price will go down like over time, just because there's not that much money in crypto. But like, what are your thoughts on like uncapped supply? Like I guess tokenomics of farms, right? Like what do you
Mhm.
look for?
Well, the whole capped and uncapped supply is interesting because like uncapped supply like doesn't matter if demand for the token is outpacing supply, right? So
Mhm.
if like so if PancakeSwap, for example, like they do their weekly burn and then they do like the lottery. And then I know like when people open up like a new syrup farm or apply, they have to like burn cake to get in or something. And it's like it costs a lot of money to do so. And so you combine all of those elements and like the bull cake, like if you're a bull on cake, and it's basically the same for Dino or any of these uncapped projects, your bull case is like, okay, the demand for the token that's going to come from all of that is going to exceed the selling pressure coming from people who are just rent seeking, like claiming rewards and then instantly selling them. And so like even if the supply is uncapped, like as long as more of it's being burned or like somehow locked up than is being emitted, then it's like bullish. Um, but yeah, it's really important that incentives for tokens and like utility for tokens has to stretch beyond just like a pool too, where you can
Mhm.
stake your tokens and earn rewards. And so see that's what happened with Badger. We talked about that earlier. Like Badger, like the utility for the Badger token just isn't there. Like the furthest that utility goes in my mind right now is like just staking it with like ETH in a pool too and trying to earn rewards from that and like hoping that it stays somewhat stable so you can just claim a ton of rewards. And so that's what I do like about these like I used to be a pretty big cake bull like early on. Like of course like it just got the rally got insane and like even I was bearish, but like I'm back to being like kind of bullish on cake. Like I'm bullish on Dino. Like I'm bullish on these types of projects because I see utility for the token that's like beyond just staking pool too. Like I see ways where people use the token and like burn the token and kind of offset the huge supply emissions that they might see from the farms. Um, but you know, I mean, that's speculation. Like in practice, you know, like, I'm sure Cake was like burning way more in the bull market than they are now.
Yeah.
Like I'm sure Dino would have been burning way more tokens in a bull market than they will now. But um, but you know, I think it's like you said, I think it's a plus EV bet to at the very least like have some exposure to that under that thesis. Like even if it doesn't work out, like it's fine. Thesis was wrong. My thesis was wrong. But I think it's reasonable that these tokens are going to do decently well. And if you put them to work, like at so for instance, if you're earning like, you know, let's just say 100% APR on something and you have a bullish thesis on it and it drops 50% and like it just stays down 50%, like it's only gonna take you a year to get your money back.
Mhm.
So, you know, farming is like kind of nice because you can offset losses through rewards. So
Yeah. Yeah, I did a live stream on Dino Sunday, basically explaining my like
yeah, I saw.
bullish. Yeah, okay, yeah. So like I think I bought in. I think my average price when I bought Dino was like I don't know like somewhere between two and $3 like because like when it first launched I tried to get in and like the token was like doing all sorts of things. So I don't actually know.
Yeah,
I only know how much I put in initially, and like I think when I did the live stream, the cost was like 160 or something, and I was like showing people like, hey, I'm still up like 20-30% on it, and everyone's like, what? How does that work? Like how is the token down 50% but you're still up? Well, I
because you're
was in,
farming five
yeah, I
thousand
was,
percent.
yeah, at the time it was like I forget, it was like 6,000%. It
Oh my
was
gosh, yeah.
pretty nutty, and now it's, let me check, now it's at 1,200%, only 1,200%.
Only
uh
1200%. That's horrible.
yeah, so
But
like, yeah, so even if like a bunch of people start selling Dino, like it goes to $1. I mean, obviously, like $1 is a pretty steep decline from here, so it'll probably be down. But if it
yeah,
happens slowly, then like the tokens I'm earning offset that. And like you said, like a lot of people don't understand the power of compound interest because it's 1,200% APR, right? So like if you keep
that's
compounding that,
uncompounded.
it's probably like over a million. Like actually, it's on my website right now.
Yeah, check it. Yeah, check an
It's
APR to APY conversion because it's going to be
it's
insane.
it's 15 million%
Oh my,
APY.
oh my God. Yeah, so I mean, 1200% is not going to last like that
Yeah, yeah,
long.
yeah.
Like it's going down every day, but it's insane. It's like it's very insane. Um, and yeah, so I I will say like they've also set up their, so one thing I hate about a lot of projects is like how they structure investor unlocks for the
Oh
VCs.
yeah, the
Like these
cliffs are bad.
projects, yeah, like these projects that do the like 20% instant and then like 25% every month for 4 months, it's just like those are not good. Like I've never seen like a very good project doing that because it's almost always it's just like a money grab. Like one thing that I'm a fan of, like I'm starting to see it in practice and it seems to work a lot better, is like linear investing over
Mhm.
like longer periods of time, where it's just like a daily unlock basically, but like over like 12 months or 24 months or 36 months in some cases, because you never have like, for some of those like kind of lower quality like pre-sale projects that like influencers show, you see like the prices, you know, just doing normal stuff, and then on like the 15th day of every month it just like nukes, and it like kind of goes back up and it just nukes. And it's because like that's when people get unlocked and they all just instantly sell. Whereas if there's like a daily unlock, you kind of just count that as like an emission, just like a farm emission, and you just factor that into the tokenomics, and then it kind of allows the price to at least see like organic price action up or down. And projects that do that seem to be doing a lot better in my mind, because like Dinoswap, you're never going to see like on like every 13th day of the month, like it's going to nuke, like it's not going to happen. And so that's actually one thing I would say. It's like really important for investors, like retail investors, to be aware of that kind of thing, because a lot of people, and like I've bought tokens too, where like I'll wake up one day and it just nukes. I'm like, what happened? And like I look into it and I see like all these wallets that sold, like got them from the deployer wallet or like a disperse wallet. And so
Yeah.
it's like, okay, like these were like pre-sale buyers. And like I didn't even know there was a pre-sale for this project. And so then you kind of know like you don't want to be in this thing like as that day approaches every month. And so when you're doing due diligence, like that's something I would factor in. It's like trying to figure out like what the terms are for invest. Like I don't know if they're always public, but it's worth like really looking into, or maybe even like asking in Discord or like Telegram, because like that really does change. Like those emissions can be worse than any farm. So it's just something to be wary of, I think,
Yeah.
for retail investors.
Yeah, and the linear incentives, the linear unlocks, it also aligns incentives, right?
Yeah.
Because like Linkpad is getting linear vesting for the next 12 months, like it's in your financial interest to, like make sure the farm is doing okay, like work with the team and stuff. But if
Yep.
it's like every 2 weeks you get like a bunch of tokens, then like at some point you might just be like, all right, like I made a bunch of money,
Well,
like
yeah, what happens is you have those projects where they give you like 25% instantly,
Mhm.
and you can sell them just to recoup your cost basis. And you actually, like in the bull market, make multiples just on that unlock. Like on that single unlock, you're up like 5x from your initial investment. And that's like what like a lot of these happen to a lot of these influencers. And so all that matters is like hyping it up heading into that first unlock. And then everything else is just gravy. Like you just
Yeah,
kind of like squeeze out as much as you can, but you don't care. But when it's like daily unlocks, like if you're like a month into it, like you're not going to have your money back from your like initial investment. Like, and you got to just like really hope that the token goes up and work hard to like make that happen. So it's way better for aligning incentives. And I've even seen other, like there's one project that Linkpad's invested in called MCDEX. I'm not
yeah.
sure if you're familiar with it. And the way they've structured, and they actually just tweeted about this a couple days ago, is they structured their vesting based on success milestones of the platform based on
Oh,
volume.
okay.
So investors like don't get any tokens until the platform reaches certain volume milestones. And then when it does, they get like a percentage of tokens. And that's really nice because like if that's one of those investments where you just set it and forget it, like you're not, you're incentivized to actually like sit down and try to do what you can to help drive volume to the platform so that you can at least like recoup your cost basis. So there's a lot of like really good ways to structure vesting. Like I've seen more and more of them in practice, but yeah, it's dangerous. Like vesting can be really bad for retail investors. And so people need to really be on the lookout for that.
Yeah, definitely. Yeah. Thanks for sharing, I guess, your insight from
Yeah.
more angel or slash VC perspective. I think it'll like really shed a light on like how you think, how like VCs think when it comes to tokens, etc. Because I think the majority of my audience is like getting into yield farming, like maybe like they're like really new to it, and it's they're buying farm tokens because like they join Telegram and people are like pumping the hell out of it. But if
Yeah.
you just take a mathematical approach of like, what's the emission, what's the demand, then you can kind of start to like hypothesize or like make a thesis, right? Because
Yeah.
I mean, my thesis on Dino is like I laid out, it's like, I think the token's gonna just do well. So yes, the Dino USDC pool is risky, right? If it goes to zero, I lose all my money. But I'm willing to take that risk because the benefit, like the risk reward is just really, really good. So yeah, I think that's a really important tip for newer yield farmers. Other than that, like what mistakes do you see like new farmers make in general, or like yeah, like what's your suggestion or like advice to those people?
Yeah. I think number one is just don't get your vision clouded by returns. I know a lot of people jump like straight into pool. I know we're like I'm like showing Dino USDC, and I'm about to say like don't jump into pool twos. Like, but like I need to elaborate because there's a difference. Like a lot of these pool twos that are really attractive are like for these like algo stables or like really risky products where you're buying a really speculative token, staking it with like Ethereum and providing liquidity. But so the problem is that when you add that liquidity, if you don't really understand what the emissions are from the pool ones, like you're the one that gets dumped on. Like if you're super early, like yeah, you might get really lucky and it's fine. But if you come in late, like a lot of people just see the APR and they just jump in just because of that. And they think, oh, well, what's the worst that can happen? Like, even if the token drops 50%, I'm making 2000% APR, right? And so my thought is like, just always like understand that like there's a good chance like for new projects and like risky projects that have really high APRs, like you're going to be the yield if you like just
Yeah,
ape into pool two. And like I know, so like I like when all the algo street stables are happening, like I had a strategy where I did like 10% in pool 2 and then like 90% in pool 1.
Mhm.
And that way, like if the token did go parabolic, which some of them
You
did,
capture that, yeah.
you capture that and like you farm like at you farm at a much higher average APR. But yeah, like and it's the same too for like even pool 1s. Like there's risky pool 1s out there where like it looks kind of good, like you're getting like 120%, but it's just not safe.
Yeah.
And if you lose all your money like in a pool, and like there's a good chance that that's like a year of yield. So just
Yeah.
like be careful.
It's just for my audience that might be newer, like, can you explain the difference between pool 1 and pool 2?
Yeah, so pool 2s are when you're providing liquidity for the farmed asset.
Mhm.
So like in the case of Dino, like Dino USDC is a pool 2. People who are like in like USDT, USDC, that's like a pool 1
Mhm.
where they don't have any exposure to like the actual crypto asset, but they're getting paid in it to add liquidity. And then some of them presumably sell that token into the pool 2. And so the pool 2s always have higher rewards, but they can be really risky at times.
Yeah.
And some people make fortunes on pool 2s. Like there's like a lot of stories of people making a lot of money in pool 2s, but you just have to find the right ones and then
Yeah.
allocate accordingly.
Yeah. Pool 2, the way I think about pool 2s is that like the protocol is essentially incentivizing you to be the exit liquidity for the other people. So obviously the
Exactly.
rewards are high, but if tokens goes to like, if token dips 90%, you're like, the yield doesn't really matter. At that point, you're just kind of wrecked. So
Yep.
I would only enter pool 2s where I think the price of the token wouldn't just immediately dump. Yeah. So yeah, thanks for clarifying that, because I didn't understand pool and pool 2s initially. Okay. So
Yep, me too.
like, yeah. So I think things, it's been over an hour. Thanks for taking the time. But I guess my question to you is like, do you have any advice for me, like as a YouTuber? Because I'm creating a YouTube channel focused on like yield farming, but there's like no precedent, like there's no one to like look up to in terms of like, okay, like this person did it like this, so I'm gonna follow his model. I'm just like kind of doing what I think is right. I'm just like just trying to be transparent with like everything I'm doing, and so far it's worked. But I guess from someone that's more experienced, like what mistakes do you see I'm making, and like how would you want like my channel to go in the future?
Well, I think what's really exciting about your position is like, even though you don't have someone to kind of follow in their footsteps, like you're going to be that person for other people.
I guess
And
so,
like,
yeah.
and you have that first mover advantage. So like you're in a really good spot because of that. And so I think like number one thing in my mind is really just like chronicling your journey, like within DeFi, like really giving good explanations of like what you're doing, why you're doing it, like how you're interacting with things. um, I know like a lot of people that I talk to, like friends and stuff that aren't into crypto, and I talk about DeFi, like it's very intimidating. And
Yeah.
so like it's really nice like having somewhere to go where they can find like really easy tutorials for things like like how to use bridges or like how to like set up a MetaMask even, like just like that sort of stuff. And so like you're in a really good spot right now. And so I think like having lots of interviews with people, having like a lot of like I love the live streams. Like I think that it's not there yet, but I think there is going to, like, how there's like a lot of markets on Twitch and stuff basically for like people who stream gambling, like they're on like Bit Casino, like playing roulette or playing Crash. And I think that we're going to start seeing that like with farming, where people like go into like these new launches and they like live stream it like you do with
Yeah.
Dinoswap and that sort of thing, and like track their returns real quick. And I think people love seeing that. And maybe even just for experimental reasons, like they want to watch like someone guinea pig it before they start doing it. So I think just like keep up the good work. Like I think your channel is really promising, and I'm very excited to be on it early.
Yeah, thanks. Yeah, like I listened to your podcast on market meditations. It's another podcast, and like I was like, oh man, like he thinks like me. Okay, I need to have him on. Yeah, it's really cool because like I mentioned earlier, there's like not that many people like farming. It is a
Yeah.
niche. I guess my channel proved that it's like not really that big of a niche or that small of a niche. There is like demand for content like that, but I also like and like every week I try to encourage more people to like create farming content, because like I feel like the last thing we need is people drawing more head and shoulder patterns on Bitcoin charts. It's like more
I
original
know.
like DeFi yield farming content.
Yep.
Yeah, and yeah, I was definitely gonna like live stream every week of like degen yield farms, but like in a bear market, I just like don't want to do that. Dino was like the one exception, and yeah, I'll just be more transparent, I guess, in the coming days and weeks.
Yeah,
Yeah,
maybe actually, maybe like it's a nice strategy to go into these really risky things, and people will love it when you lose money. Like people love watching
yeah,
other
maybe
people
that.
lose
Yeah,
money. And
yeah,
so you'll it's
Schadenfreude.
just like, it's just an operating expense, and just like set aside a little, it's like a tax deduction. You're gonna lose it probably, but like you're doing it for the stream.
Yeah, and like
And
the title is like losing $2,000 on
in
like
10
on
seconds.
pizza swap.
Yeah. How I lost 2 grand in 2 seconds on pizza swap.
Yeah,
Yeah.
no, that makes sense. It's like a marketing spend. It's just
Yeah. It may I think it could work. Like maybe that will like even spark like I could see like a lot of like gambling audiences like being interested in DeFi, like especially the game theory side of it. And so maybe like if you could find a way to kind of bridge those two things, like
yeah,
pull people from like gambling Twitch over to like DeFi Twitch.
yeah, because I played poker full time last year, and
Right.
like a lot of poker players are in crypto. It's just like we all think the same, and
Yeah.
crypto just makes sense. I guess quick background is like online poker is illegal in the US. So the only way to deposit money into these poker sites was through Bitcoin. So like I
Yep.
knew about Bitcoin since 2016, 2015. I thought it was a scam, but 2020 I bought my first Bitcoin, and like I used to be a Bitcoin maxi, but like now I'm like a yield maxi.
Yeah.
uh,
Same.
yeah, so yeah, there's definitely an overlap between like gambling and crypto. I wouldn't consider poker like gambling because it's just
Mhm.
like it's a mathematical game. But I mean, I guess on the surface, it is gambling, right? Yeah. So I guess, do you have any regrets as a farmer? I feel like because I feel like looking back at my journey, I definitely have regrets of like why did I buy the farm token? Like look at the emission schedule. I'm getting wrecked out here. But like what are your biggest regrets, and like what have you learned from that?
Yeah, I think my biggest regrets is sometimes being too passive with farming. Like when the algo stablecoin trend began like 3, 4 months ago, or maybe like 5 months ago. Um, like I never had any huge wins from that. Like I made like a little money here, a little money there, but it's because I wasn't like chasing it hard enough, and it was because it was kind of scary and like didn't like fully understand it. Um, so I think that sometimes like there's really good opportunities there. Gain involved in like these kind of new trends where people start making a lot of money. If you chase those, like it's like a firecracker. Like you've got like 3 seconds to basically like get the money and get out. But like if you do it, like you can do really well. And I missed that entire trend. So that's like one big regret I have. The other regret that I have is like, and I've changed this now, but I used to like move around farms way too much. And when you start moving around farms, like there's a lot of like little hidden costs that you don't really know. Like swapping assets, there's a fee, right? There's
Yeah.
slippage, like especially as you start getting into like higher numbers, like you start having like noticeable slippage. And it can be to a point where even if you farmed for a month, like you erase all those gains just in slippage. So I would say I now have like a passive strategy where I just set farms and kind of forget about them. That's like my bear market strategy. Um, it's like it's very tempting to be active with it and like moving stuff around every day because it's kind of fun. Like I enjoy it, but like you can just whittle away money doing that, and like you don't even know it until it's too late. And you're like, oh, where'd all this money go? So
Yeah.
yeah, I think that's another regret I have. But besides that, like I'm very grateful for everything that's happened, and I'm very grateful for DeFi and excited about it. So I try to learn from my regrets, but I don't dwell on that too much.
Yeah. Well, it's been a great conversation. And I have just one last question for you.
Yeah.
So like what are you most bullish on in the next 3, 6, and 12 months? So like or maybe like in the next 2 months, 6 months, 12 months, like short term, midterm, long term. It could be
Mhm.
individual projects, ecosystems, or just like, anything like
So I would say short term, I'm probably most bullish. Well, actually, I'll start backwards. Long
okay, okay.
term, I'm most bullish on like infrastructure plays and like unique ideas. So I think long term, I think like partially collateralized and uncollateralized lending, I'm really excited about.
Oh yeah.
Like Maple Finance is a project worth looking into, that we kind of worked with for a little while. That's a very exciting project. So long term, like that's something I'm always watching. I also think insurance is going to play a bigger role in the market long term. It's just not there yet, and I think it's going to take some time to get there. Um, like that could be like years down the road, but I think insurance protocols will do like pretty well in the future. Midterm, like next 6 months, I think like the obvious play now that everything is crashed is probably to buy like layer twos, like if you're or side chains, like if you're bullish on Polygon, if you're bullish on Binance Smart Chain, like buy BNB, like if you're bullish on like Polkadot, which like I'm not bullish on, but or if you're bullish on like Terra, right, by Luna, or if you're like I could see like those doing better than like the projects within those ecosystems short term or midterm, I mean. And then short term, I'm very bullish on the idea of like we're in like a liquidity driven market, and so I'm really bullish on projects that try to um I guess like rationalize and unify liquidity. So like Woo is one of those projects I'm really bullish on.
Oh, okay. Yeah.
We've talked about that before. There's a couple others like on my eye on, but I don't know too much about them, so I don't really want to say. But so yeah, so I think short term, I think like liquidity focused projects are going to do really well. Midterm, I think like ecosystem native tokens are going to do well, like layer twos and stuff. Like Matic will probably be a good buy pretty soon. Like Luna, that sort of thing. And then long term, I think like more advanced concepts like insurance, uncollateralized lending, that sort of thing.
Yeah. Yeah. Insurance is really interesting. It's just like, I feel like there's a moral hazard when it comes to insurance. It's like these protocols, like they're not going to want to insure the risky projects, but people want insurance on the risky projects, right? So how do you bridge that gap?
Exactly.
I don't see
Exactly.
Nexus Mutual doing that right now, but maybe that'll change. But that's always like
No,
my,
they're not
no,
doing it. Like
yeah,
that's why I think like it's years down the road before we see like real insurance, and plus people don't want to insure like short-term farms and stuff, so
yeah,
it's kind of tricky. Like the space needs to mature a lot more before we have like mature concepts like that in place.
yeah, that makes sense. And yeah, under collateralized loans, that would be great. It'll be
Yeah,
cool if like our MetaMask can be like have a social score or something.
I
So
know
like,
exactly.
yeah, so
On-chain
because like
credit.
you're definitely like you should definitely be uh eligible for like a under collateralized loan, right? Just because you've been a good citizen in the Ethereum
Like
ecosystem.
a DeFi citizen, yeah.
Yeah, but me, I'm like taking all this risk, so maybe I need to post over collateralized loans,
Oh, I
things
don't
like
know about that.
that.
But there are some really cool projects that are building on-chain credit, and I think also this is what I'm bearish on long term, but also I
Oh
think
yeah, that
that
too, bearish.
those types of projects are kind of double-edged swords, because on the one hand, like yes, it's nice, but some of the projects that are building those on-chain credit systems are the same projects that are trying to build like KYC nodes and stuff for Ethereum wallets so that they can track ownership of wallets, which like isn't like a bad thing necessarily, but it's gonna like slow adoption for sure, and it's gonna make
Mhm.
things complicated from like a regulatory standpoint. So regulation is not good for DeFi in my
Yeah,
mind.
it's coming too. I mean,
It's coming,
yeah, we
but
recorded.
it's going to take a long time in my mind.
Yeah, it'll definitely take some time. Yeah, and these regulators like don't really know what they're doing too. It's just like I think yesterday or 2 days ago, like BlockFi got a cease and desist letter,
Yeah,
and like the regulators were like, we don't like these DeFi applications. It's like, BlockFi is not DeFi, but I mean, I
yeah,
guess I guess these people don't understand. So it's gonna take some time to educate the boomers.
exactly, exactly. It's a steep learning curve, that's for sure.
Yeah, it definitely is. I mean, even yeah, I feel like I I have an open mind, but I still took like a really long time to understand it because everything
Same.
just looks like a
Yeah.
scam, right? I mean, like 20%, like this is a scam, but like what us youngins are like, no, that's FUD, bro. Yeah.
100%, that's a scam. I need the 1500% cool twos.
Yeah, yeah. Anyways, yeah, thanks for the conversation. I think my audience learned a lot. Where can my audience follow you and like, yeah, I guess hear what you're doing?
Yeah, Twitter is probably the best place, and I'm just at Cole0x. And I'm trying to start posting more frequently. I kind of just like I used to like try really hard, and then I just kind of started like shit posting and stuff.
Yeah.
So I want to get back to like posting more like cerebral thoughts and not just like Pepe memes. But
Yeah.
that's the best place to get in touch with me too. If anyone wants to message me, I have my DMs open.
Yeah. Awesome. Yeah. Well, anyways, thanks for the talk. I really enjoyed it. Learned a lot. I'll try
Yeah,
to apply your knowledge to my farms in the future.
yeah.
But
Thank you so much for having me. It was a great chat.
yeah, great. Yeah. Thank you for watching
All
and have a
right,
nice day.
talk soon.